So how exactly do some investors or even asset managers look towards creating products and then actively trading the portfolio to create value that is then passed on to the holders of those particular instruments?
Look, if as an investor you can invest alongside of a manager, invest in a manager who is actively monitoring a portfolio and going through the same stress testing that a long-short equity manager, for example, which is what I did for 13 years, is doing, you're getting the best bargain in the business. That's when you really have to ultimately understand who you're investing in. So to the extent that managers like ARK Invest can be taking this area of the economy where there's enormous innovation and where there's an opportunity, I think that's fantastic. The question really is, do investors totally understand the investment approach of the manager? And I think it's great to have Kathy here because I think there's some controversial stuff that she's been involved in.
Well,
that I think we
let's
can
talk about
understand
that.
So that was Kathy Wood of ARK Invest, and that brings us to the subject of today's video: how finance gurus prey on hopes and dreams of retail investors. And if you guys are following the channel, you'll know we were talking about Tesla earnings report the last couple of days, and in fact, it was a wild day of trading because Tesla stock was essentially going up despite a bad earnings report. And you're like, what? And these are the kind of headlines that we got. As revenues fall 9% and profits drop 53%, why is Tesla's share price going up? I want to play you some more of Kathy Wood. We're going to have a discussion on this, and essentially, you got to learn from history, guys, if you want to get good at this stuff.
You at ARK Invest have become very closely associated with one stock in particular, and that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes.
This means that you are obviously very bullish on Tesla and you do hold it in the funds. Is that correct? And if so, is it just a buy and hold, hope it pans out for the next 20 or 25 years? Or is it something different in the way that you approach this particular holding in Tesla?
It is our largest position, but before I go into that, our conviction has increased in the last year or so. It's our largest position. It's down about 29% this year, and it's always been our largest position this year. And yet our fund is up 28%.
How is that? How does that happen?
Yes.
How does that happen?
It is because last year, when genomics was under assault because of reimbursement concerns and pricing concerns and so forth, we were leaning into those heavily. So you buy low, right? We were leaning into those. And so our second largest position, Invitae, which we think is one of the most important molecular diagnostic companies out there, riding down the cost curve of DNA sequencing, it's up 125%. It got as low as $5 last year. Today it's $18.
So I was mentioning before, guys, you want to learn from history. And in that video, you saw that ARK Invest at that time was Tesla, Invitae, Stratasys, and Illumina, right? Those are the stocks that she was essentially pumping. Now, I want to check up what happened to these things, and that video is from 2019. Let's talk about Invitae first, right? So here's Invitae. You can see the chart went up like crazy, and then suddenly it just crashed. You guys can see it for yourself, and in fact, they got delisted. It's down 99.99%. I want to take a look at their financials here. And the reason why I'm bringing up financials is because, guys, it does matter. You do want to look at these numbers, and it's something I stress a lot on this channel. So if you look at this, your blue bars is your revenue. So yes, they did have revenue growth. I mean, I can see it there, right? This is from 2018 to 2022. It's growing. You can see it there. The problem was the yellow lines, right, is your net income is all negative. So they were losing money, and it looks like in 2022 they had a horrible year. Moreover, in February of 2024, the stock got delisted, and also too, it looks like they declared bankruptcy, Chapter 11. That's what happened to Invitae. That was the big holding of ARK Invest. What about some other ones that we talked about? So what were the other ones here? There's another one called Stratasys that was talked about in the video, and this was a big part of ARK Invest. You can see there was a big run up right there, right? You can see it right there. And a big drop. You had another pump again and then a drop again, right? Currently trading at $9. And you're probably going to see and notice a similar pattern. This company was losing money. They lost a bunch of money in 2020, and they're still losing money as of this 2023. And this is something that I stress with you guys. Look at the numbers, and this is sort of why we do this on this channel. And I emphasize when you do an earnings report, please talk about the earnings. Are you making money or not? What about Illumina? Well, take a look, guys. We have a similar pattern. The stock went up like crazy. They were pumping us like nuts, and now it fell back down to earth. what happened? Well, people discovered the financials. So take a look at this. So it is true that they were up in terms of revenue. I can see it. And they actually were profitable at one point. I can see that as well. But for whatever reason, the wheels fell off and they took a big loss in 2023. And it looks like they're still unprofitable as of now. Now, what about Tesla stock? You can actually see it has a crazy run up. You guys can all see that. And it's actually been on a crazy run down. And their earnings report just came out. I want to show you guys the same kind of numbers that we're looking at with other ones because you want to do comparable things. So I can see with Tesla, their revenues are growing. I can see that. I can also see they're a profitable company. I can see that, right? This is all in the annual. However, the reason why the most recent earnings report is so important is because their revenues are in decline and their profits in decline. And this is something that I really stress with you guys as well, is take a look at this stuff for yourself. This is called the financial summary. It's in the earnings report, and the key pages are pages 4, 5, and 6, with page 4 right here being the most important one. The sad thing though, and the thing that I get most frustrated about, is the people on YouTube skip over page 4, and they do it on purpose because they don't want to show you the numbers. Have a look.
New products infrastructure with $2.8 billion of capital expenditures in Q1. And now the first breadcrumb, which leads to a bombshell, so stick around. Ultimately, we are focused on profitable growth, including by leveraging existing factories and production lines to introduce new and more affordable products. By the way, that's products with an S, plural. More than one. New and more affordable product coming soon. Tesla's currently listed capacity, featuring greater than symbols on almost every one of these numbers, is now 2.35 million. Big caveat there. It could be a lot more than that. And Tesla also mentioned that they'll be entering Chile soon, which will be supplied from Gigafactory Shanghai. Quote, since the launch of FSD supervised V12 earlier this year, it has... My Tesla stock price target for year end 2024 is $3,000 per share. In 2024, I am expecting the two biggest catalysts to date in the history of Tesla. Robotaxis doing their first fully autonomous fares somewhere on planet Earth, most likely in the US, maybe in China, and the release of the $25,000 Tesla, aka the Tesla Q. Please,
one of the subdivisions, I'm predicting that Tesla stock price in about 15 years will be somewhere around $48,893, which from today's date is roughly 47x where we are today, which is a lot, which is a lot.
So as you can see, they purposely skipped page 4. It's not just the backwards baseball hat guys, a couple other challenges as well, which I showed you in other videos, and they give you wild price targets. The thing I try to do so much on this channel with you guys is just go through the news every day and help you understand it. And also too, we check everything together. So for example, when we read this here, Tesla's profits dropped 55%. Yep, I saw that. I saw it in the numbers, right? And so I know other people are essentially misrepresenting or lying to you when they skip over stuff like that. It is so obvious. And then you get these wild headlines. Tesla stock surges despite plunging profits as Musk talks robotaxis and cheaper cars. And that's essentially what is holding up the stock right now, is a story. It is not financials that are holding up the stock. It's not the numbers. It's a story. It's a fairy tale saying, hey guys, we're going to have robotaxis and you're all going to be rich. And that's why I wanted to show you guys of Kathy Wood and ARK Invest before. She was really good at telling stories, and stories can move a stock. They can. You saw it with the other ones that I talked about, the Invites and the Luminas, and this was Assist Somethings. And ultimately though, financials do catch up to you. Now, why do the people on YouTube, basically misrepresent every single day? Why does Kathy Wood do these kind of things? To be perfectly frank, guys, selling hopes and dreams is profitable. This is the backwards baseball hat guy, the solving money problem. He's got a Patreon, 6,000 members. I can see it there, charging, $10 a month, $25 a month, $100 a month. You have 6,000 people who give you that amount of money. It adds up pretty quickly. And it's actually pretty same with Kathy Wood. You can see here, this is a headline, Kathy Wood's flagship fund pockets $300 million in fees since its 2014 launch. And we just talked about it yesterday in a video that they make about $230,000 a day in fees, which is pretty crazy. And that's management fees, managing your money. And for them, basically, they just sell you a story, right? It doesn't actually matter, even though the stock is down quite a bit, and this is ARK. It doesn't matter the performance of the stock to them because they're making money on just managing your money, or in the situation the YouTuber is making money on selling you Patreons for useless information. This is sort of why I make these videos for you guys, because I want you to understand profits do matter, earnings do matter, and ultimately the numbers do catch up with you. So I'd love to hear your thoughts on this. Please be careful out there, and I'll catch you in the next video.